Ladies and gentlemen, good day to you. My name is Patrick L. Young, coming to you from the international headquarters of ZYen today. Delighted to welcome you as a guest chairman. Michael Manelli is away this week. We've got a fascinating topic today for the Financial Services Club. It is smarter ledgers, how BAFT is changing payment commitments, how DLT payment commitments will change trade. An absolutely marvellous lineup of speakers today. Scott Stevenson, the Senior Vice President of Trade at BAFT, Sriram Srinivasan, who is the founder and CEO of Skuchain, and then finally, we're going to hear from Dr. Philipp von Randau, who is the co-founder of FQX. Let me just say, first of all, a huge word of thanks to everybody who is a sponsor of this organization. Allow me to introduce myself. I am the executive director of an organization called Valerian PLC. Once upon a time, way back in the distant, good grief, years of analog world, many, many decades ago, I wrote the first best-selling book about fintech, Capital Market Revolution. And for my sins, I also published the daily newsletter of the Bourse business, Exchange Invest, the exchange of information. However, enough about me. I'm here today to entertain this fascinating discussion, which is going to take place against the backdrop of, well, let's put it this way. There is a two-word phrase which I think has become the swear word of modern times, where we're used to communing via teleconference, via the internet, and via email. Those words, ladies and gentlemen, are wet signature. At the end of wet signature is an endless cornucopia of paperwork, and that's exactly what we're going to be talking about, reducing today in a world trade context. I, for one, well, let me say, I can't wait to hear the joyous signs from the trees as they're overjoyed at the idea that there are going to be less people trying to chop them down as we facilitate greater and more frequent world trade. And indeed, I speak as someone who is a freeman of a liveryman, in fact, of the worshipful company of world traders here in the City of London. So, thank you to all of our sponsors for the great opportunity for this event to take place today. Let me, without further ado, invite the first of our speakers, Scott Stevenson from BAFT, who is coming to us today from Washington, D.C. Scott.
Thank you, Patrick, for the kind introduction. Good morning, good afternoon, wherever you may be located. My name is Scott Stevenson, and I'm the Senior Vice President for Trade for the Bankers Association for Finance and Trade, or properly known as BAFT. BAFT is a Washington, D.C. based organization, and it's the leading global trade association for transaction banking. By way of history, in early 2016, BAFT recognized the digitalization of trade was inevitable. More recently, it's also been recognized that there will not be a big bang in terms of the adaptation of digitization. And it is critical that enabling legislation creates the legal framework within each country, but this has proven to be a long, drawn-out process. As time is of the essence, it is critical that industry creates the standards now with a sharp focus on interoperability. As we well know, the centuries-old paper-based process of international trade and trade finance, along with many other commercial transactions, is people-intensive, cumbersome, susceptible to fraud, and costly. However, efforts to convert paper documentation into digital form to address these issues had to contend with both technological and legal barriers. To understand the legal issues, BAFT, supported by the group R3, commissioned a paper, Code is Not Law, from the New York law firm of Sherling and Sterling. This paper provided the foundation for the legal framework for this undertaking. In an effort that culminated in 2020, BAFT saw an opportunity to significantly leap forward the digitization of trade finance with the emergence of blockchain distributed ledger DLT. Recognizing that a core element of all trade transactions includes a payment commitment, a BAFT working group produced standardized rules for the transformation of payment commitment into a digital asset to be used in any trade finance solutions sitting on any DLT platform. BAFT published an open source business and technical standards for distributed ledger payment commitment, or DLPC, a simple, legally binding, enforceable, interoperable, and importantly for trade finance, a negotiable financial instrument in digital form. The ability to negotiate the instrument is absolutely critical in terms of the operation of trade finance. The BAFT DLPC is a payment commitment in the form of a digital asset that has been designed to work with any DLT-based trade finance solution sitting on any DLT platform. This can be blockchain or cloud-based. DLPC therefore offers two key advantages over payment commitment embedded in a paper negotiable instrument. First, it provides a technology-neutral solution that allows companies to record a digital representation of a payment commitment on a DLT that can operate within any DLT-based trade finance solution sitting on any DLT platform and across different platforms, resulting in interoperability. And B, secondly, it is supported by a legal framework that seeks to provide the same degree of business utility and protection for banks and corporations as is provided by the laws governing negotiable instruments. The BAFT Working Group recommended the Delaware Uniform Commercial Code and Uniform Electronic Transaction Act, which is covered e-sign, laws which have been in place since 2000 as a governing law to anchor the DLPC's legal framework. Legal options in the US are now being enhanced with the revisions to the Uniform Commercial Code passed this summer by the Uniform Law Commission and are now being presented to individual state legislatures for adaptation. It is hoped that by the end of 2023, all of the US states will have accepted the amended Uniform Commercial Code. In terms of other countries, Singapore, the UAE, and Bahrain have aligned their legislation with UNCITRAL, which is the United Nations Model Law on Electronic Transferable Records, or MILEADR. The UK Parliament now has before it legislation updating the Bills of Exchange Act of 1882, so it's probably time to update this. It is expected to pass Parliament in the first quarter of 2023, and we're keeping our fingers crossed. Further, with the urging of several international groups and organizations, among them the G7, the EBRD, and the International Chamber of Commerce, a number of trade nations are looking to adopt MILEADR framework for regulation of their digital trade law. As my fellow speakers will demonstrate, these standards have now been commercialized in international trade transactions by Skuchain, a Silicon Valley fintech, and are mirrored in eNotes created by Swiss fintech FQX AG that are being used in trade finance and a myriad of capital market transactions. This shows the flexibility of the platform. In summary, the draft DLPC has enabled trade operations and trade finance to move into the digital age with the benefits of security, efficiency, cost savings, and sustainability in processing. Thank you.
Scott, thank you very much for that fabulously rapid surmise of all of these exciting things. Indeed, the 1882 Bills of Exchange Act, written during a golden era, the period in time during the Victorians when British laws were actually comprehensible and easy to read. I just hope that we get something similarly comprehensible for the future of digital commerce. Let me just add, ladies and gentlemen, as a housekeeping note, we're going to take about 20 minutes in total for the 3 introductory presentations. As I'm sure you are aware, being mostly habitués of these excellent seminars by the Financial Services Club, you have the opportunity to ask questions. Please just type those into the screen just beside where you're viewing this particular array of interesting people, and we will attend to them in due course once we've got through the presentations. Equally, presentations will be available to download. Without further ado, and I must say, one aspect, while I'm not reading the biographies of the speakers today out loud, I think you can manage to do that in the comfort of your own homes or offices, I'm most impressed at the fact that Sriram is not merely someone who's had an incredible technological and entrepreneurial career, but indeed he's a qualified merchant shipping captain. So there we go. It's not going to veer into below decks trade finance edition, this particular financial services thing, but I think it's fascinating that you've got that wide range of experience. So Sriram, take it away, please. Tell us all about your technology.
Thank you, Patrick, for that introduction, and a great sort of introduction, Scott, on the DLPC. Well, so yes, I did start my career leaving India on a ship. I'm a qualified captain on those big boats, those Panamax type vessels. I've signed bills of lading whilst at sea. So talking about 1882, the ICC came up with the modern letter of credit in 1920. That's kind of the time frame we're talking about here, about change. Today, I sit in Mountain View, California, and we are building a distributed public-private hybrid platform, which essentially embeds the DLPC protocol on a blockchain interoperable platform. If you could go to the next slide. What I think all of us understand is digitization and its value. What the DLPC is the formation and the origination of a digital asset. As Scott pointed out, a key part of the viability of a digital asset is it legal? Can you negotiate it? There are a lot of activity around the world to turn natively digital instruments like the DLPC into legal instruments. The United Kingdom this month actually put out that bill that's going into Parliament. And we kind of have, I'd say, with that and with the Delaware law, with Singapore, with the UAE and Bahrain and others, reasonable expectation that within the next year and two, we'd have maybe 70 to 80% coverage of global trade where digital instruments are legal. The DLPC conforms to essentially what's called the model law for the electronic transfer of records, and we'll go into a little bit more detail. But fundamentally, the distinction between a digitization of an asset and turning that into a digitization of an invoice and turning that into an asset is where we come in. One of the sort of sentences in the bill that was submitted to the UK Parliament is about a reliable system and what is a reliable system. And as a DLPC goes through its different states from being draft to contingent to effective to being discharged, who's allowed to do that? How can they do that? Are the parties agreeing to do that? All of those sorts of actions have to be understood within a protocol that is secure and cryptographically, if you will, attestable too. And that's sort of where we come in. Could we go to the next slide, please? The DLPC has essentially a series of states that it goes through, and understanding its provenance and being able to know what the current state is at any point in time, being able to have a registry so you don't have duplicates of that same DLPC are all sort of intrinsic to being able to assert that it's a reliable system that is providing attestations. On the Codex website at Stanford, you will see an article that goes into some detail on how the DLPC conforms with the MLETR, the model law, because that's the source of legality for this instrument. You'll see on the bottom left a link to a University of Michigan Law School white paper that goes into a little bit more detail on how a DLPC can be utilized within the world of trade finance, and specifically, to sort of provide alternatives to standard factoring, reverse factoring, and then go one step deeper into deep tier supply chain finance. And lastly, if you think of the sort of adoption of DLPC as it cuts across different geographies in the world, we did the very first trade transaction between 3 different countries, Peru, Singapore, and China, in the purchase of copper by a large trading company, Mitsubishi, and there's a press release, so we are able to talk about it, and Mizuho being the bankers who essentially provided the guarantee. So could we go to the next slide, please? That's the first use case that you will see on the slide, where essentially it was an open account transaction guaranteed with the DLPC. And that was valuable. It was essentially a breakthrough sort of transaction. But what it did essentially was allow a regular transaction to gain the efficiencies of digitization. The second use case, where the DLPC is used as a replacement for a letter of credit and or a bill of exchange. That's essentially what it is that smart contracts allow one to do. We are modeling it where you could have a document verification service that verifies the documents that the shipper essentially provides, which then releases funds which can be provide for the settlement of the transaction, either using traditional fiat and wire transfers and or backed by crypto collateral. And the third and interesting sort of value proposition is deep tier financing. This is where a tier 2 supplier can gain access to financing based upon the cost of capital of the large buyer, which can be significant, especially if you look at interest rates that large buyers have LIBOR plus 0.5 maybe, whereas tier 2 suppliers might be sitting in South America or South Asia and have maybe 14, 16, 18% annualized interest rates for their cost of capital. There's a significant delta there. On the right-hand side, you'll see a screenshot to the Asia Development Bank brief that came out, well, last month in September, where they go into some detail about how these deep tier finance models work, and they have highlighted how the use of DLPC by Skuchain in there. I'd urge you to look at it to get a greater detail. And I think that's it from Skuchain. If you have any questions, please ask them in the chat window. And back to you, Patrick.
Thank you very much, Sriram. Very, very interesting altogether, and certainly inspiring, the idea that we could be looking at 70 or 80% of the world trade managing to hit onto these blockchains in the near future. I'm sure that's going to come up in the questions in a moment. If you've got a question, ladies and gentlemen, please go ahead and ask it. I can actually respond to John Taylor. Thank you very much for your question. All the presentations are going to be available today. You'll be able to download them from the website, which relates to this particular Financial Services Club meeting. So you'll be able to get all of that information there. And of course, this is being recorded, so you'll be able to watch the whole thing once again if there's anything you've missed. So let me jump without further ado from Mountain View in California. We're going to go all the way across the United States of America, across the Atlantic, and arrive in the center of Europe. We're going to Frankfurt on this occasion. Dr. Philipp von Randau, he's had a very, very illuminating and esteemed career as a lawyer. Now he finds himself involved with FQX, of which he's the co-founder. Please, Dr. Philipp von Randau, take it away. I think you may be on mute.
Sorry, and thank you again for the introduction, Patrick, and also congratulations to BAFT for the initiative on DLPC. Thank you, Scott, for heading this. I'd like to present to you FQX and the solutions that we have come up with, in particular for the space of supply chain finance. It's a Swiss-based fintech in Switzerland, in Zurich. It was founded by trade finance professionals, blockchain natives, and some lawyers and regulation experts. And the solution that we offer is actually ready to go. It is already implemented and it is used. And to bridge to the presentation from Sriram, we looked also at solutions for typical problems in supply chain finance. In particular, we asked ourselves, do we find a solution that allows buyers, when paying, to provide suppliers with the financial instruments which permits the buyers to keep their payment terms for later payment and provide the suppliers nonetheless with an opportunity to raise cash. And clearly we quickly stumbled on the bill of exchange and the promissory note that a buyer could provide to a supplier with a payment promise to become due later on. And then the supplier can basically turn around and sell that instrument to a third-party investor, and such third-party investor then would have an unconditional promise to pay by the buyer, which will be insulated from any issues, deficiencies, if at all, of the underlying trade relationship between the buyer and the supplier. So basically, we were looking for a digital negotiable instrument. And we came up with a solution to base this on Delaware law and on the Delaware Uniform Electronic Transactions Act, and added to this a quite unique and I think quite clever dispute resolution mechanism, which allows to have judgments to be enforced in more than 165 countries of the world. And only then we realized that in parallel, BAFT has initiated and come up with a DLPC, and to our great satisfaction and happiness, we realized that our solution is in full conformity to the technical standards as promulgated by BAFT. And we since then enjoyed also support from some of the experts of BAFT in this regard. So our blockchain-based solution is initially based on Delaware law. Since then, obviously, as Sriram already elaborated on, a couple of other jurisdictions have followed suit, and so we can now offer so-called eNotes as unconditional promises to pay, not only based on Delaware law, but also on Singapore law, on Swiss law, and we are looking forward to then adapting it to UK law. Unfortunately, in continental Europe, no such solution will be available soon, because we are stuck with the old-fashioned Geneva Convention on promissory note, which is very, very difficult to change. And thus, I believe we will resort to a solution that BAFT has also pursued, that is to establish indeed kind of a parallel legal framework, instead of trying first to deal with the UCC and read anything into it. I think that was a very smart approach with adopting and using UETA for that purpose. So this is a blockchain-based solution. It is allows not only for the issuance, but also for the transfer and the settlement of eNotes. Since then, we have realized that the promissory note as the underlying instrument in digital form is such an enormously powerful instrument, and therefore we have embarked on a further journey into the far larger space, even larger space of general debt finance, in particular debt securities. Let's have a quick look at the next slides. Next slide, please. So we aim to have a blockchain-based debt securities, in particular in the short-term space. Next slide, please. And when we look at the next slide, we really believe that we can use blockchain and the promissory note as its underlying instrument for secure, direct, regulated, and accessible debt securities. Next slide, please. And believe that with that, we can do away with a couple of deficiencies of the bond and commercial paper markets, in particular, that there is too much intermediation still, that they are still fragmented, and we can automate this process significantly, make it even more really borderless, and do away also at the same time with some of the legal uncertainties that are currently hampering the crypto economy space. We focus currently very much on players in the stablecoin area and from then on, we hope to provide these solutions also to the more general industry. But these are things we are currently working on the supply chain and trade finance side. We are already there, and I believe still ahead of the curve. Thank you very much for listening.
Dr. Philipp von Brandau, thank you very much. That's been a very, very interesting series of presentations. Ladies and gentlemen, we've got about 20 minutes to indulge ourselves in some Q&A. There are several questions already come in. If you would like to ask a question, go straight ahead and drop it into the chat functionality, and we will attend to it shortly. John Taylor, thank you very much. Once again, you've given us a very specific question here. I do like it. How can the use of DLPC and eNotes specifically help SMEs in bridging the trade finance gap? Who would like to start by answering that? Sriram, perhaps?
Sure. The trade finance gap, based upon ADB's study, is about $1.7 or $1.8 trillion, and it's primarily due to the cost and complexity involved in onboarding these large number of SME suppliers on the bank platforms. The case of KYC and other sort of financial regulatory requirements can be quite onerous. The DLPC provides for the opportunity for these SMEs to gain financing from the banks without having to be onboarded. They leverage their existing commercial relationship with their buyers. So their buyers are now able to offer them early payment because the buyers can leverage the accounts receivables that they have with the anchor buyers to be able to produce DLPCs that banks can then discount, which they can use to early pay their tier 2 suppliers. This is a win for the large buyer because they now have a healthy supply chain and also likely some visibility into where that inventory is. A clear win for the SME because they get early payment at attractive rates. A win for the tier 1 that's in the middle because they're able to cement their relationship, keep the commercial terms and sensitive terms private, and a win for the bank. They can now finance a greater spend of the large buyer without having to onboard all of the suppliers. So that's kind of the value that the DLPC is able to bring to SMEs.
Sounds very exciting to me. Go ahead, please.
If I may quickly add to what Sriram said, with which I agree in full and concur, I'd like to add 2 observations, and that is that with regard to SMEs, it's often very costly and burdensome to enter into the more extensive and exhaustive legal arrangements that currently provide supply chain finance, whether it's factoring, certain secured lending arrangements, and so forth. And often these frameworks have additionally quite a restrictive set of rules for those companies. The opportunity to engage in a deal-by-deal wise financing arrangement, which is offered by eNotes, is a quite attractive alternative to this. So that's my 5 cents to this. Thank you.
Very interesting. Scott, how do you feel about this? Because I think there has been a problem over time where a lot of SMEs have found themselves essentially unbanked when it comes to trying to indulge in world trade these days. Certainly that's been my experience coming out of the UK and a lot of Europe.
No, that's absolutely right, Patrick. And I think what kind of an evolutionary path as the use of letters of credit declined in terms of how an SME would be financing its shipment, its production, and went to open account, that cut out a lot of the financing available to SMEs. Digitization offers a great hope in terms of what I would call the democratization of financing. This combined with instruments like or facilities like the GLEAF, the Global Legal Identifier, will make available the onboarding, the KYC, the Know Your Customer requirements. Should make it a lot less onerous. One bank I talked to said typically it costs them $5,000 to $10,000 a year in terms of KYC costs for an SME. That would be difficult to make up in terms of profitability, whereas the DLPC offers an alternative to eliminate a lot of the costs involved in terms of bricks and mortar banking, but also the manpower necessary to monitor. One of the key things I think that was shown in Sriram's review was the fact that ESG, the environmental social governance, which is the coming wave of regulatory oversight, is available in terms of tracking for SMEs through the DLPC, and this is going to be a great boost to the ability to track downstream carbon emissions of the things that are associated with or concerns with ESG with SME financing.
Fascinating altogether. Thank you very, very much, gentlemen. So let's move on quickly to Bilge Osizik has asked a question here. To do all trade finance or payments through DLT, are all institutions on the same page about applying it and having one unique DLT platform? Perhaps, Scott, you could start from there. How are you seeing this from the associational standpoint?
It's a slow process at the moment, and one of course, if we're looking at the United States, until the revisions of the Uniform Commercial Code are in place state by state, there is a general reluctance to kind of dive into the world of digitization. The question, I think, basically gets to the whole issue of interoperability, and that's why it's really necessary that the industry establish the standards so that interoperability is there. It should not be a piecemeal approach. If everyone adopted Meliter, that would be great, but that's going to be a long, slow process. So the emphasis has to be upfront on industry establishing the standards.
Excellent, thank you very much. And therefore, that actually, I think, probably goes some way to answering Bilge's follow-up question, because he is asking who will be the engine for pushing this agenda. Now, I think we might have lost Scott there due to an internet kerfuffle, but let me ask, here he is again. Oh, good to see you once again, Scott. So who is the engine pushing forward this agenda? Is it going to be you, Scott, or is it going to be the likes of the vendors such as Philipp and Sriram? Scott.
Well, if that question is to me, what's been interesting to watch particularly over the last 2 years, is that, and we see this amongst our association members, which are banks, which are fintechs, which are commodity firms, is that there was a reluctance to join forces. There was almost a view that the fintechs were in direct competition with the banks. And the banks saw the fintechs trying to take their business. However, in the last 2 years, there's been a lot more emphasis and results seen in terms of collaboration between them. It's an understanding. It's a mutual process that is necessary to push it forward. We can't have a situation where the fintechs are going off in one direction, but the banks want another solution. And so it really has to be a joint effort. We're seeing much greater effort in that regard.
So you're seeing much greater effort. May I ask the vendors that are here, Sri and Philipp, how do you find the reaction from the likes of the banks and other counterparties to your proposed solutions?
I could take that. So there is a lot of interest. Everybody recognizes the value. The issue, though, is the implementation. I think the key phrase being, quote, the reliable system. And the centralization, I think, which alludes to a previous question, is there going to be one central register? So inter-blockchain communication is a protocol that has been around now for about 4 years, I'd say. And with the advent of DeFi, we now have a layer 1 blockchains that house trillions of dollars of assets that are IBC compliant. So if you think of a future world where there's interoperability between blockchains and a network of blockchains and digital assets that can be transferred from one blockchain to another, you're beginning to see the baseline. I think that everybody sees the value. Everybody is waiting for an implementation that actually brings it to market.
Very if I may add to that,
please.
I believe that many players in the market now understand that there are multiple solutions available, both on the legal as well as on the technical front, and to some extent that will stay the way. In particular, with regard to the legal requirements, we can adopt just according to the needs of the various market, whether it's Asia, the Americas, or Europe, just to name a few, to use the laws that are the most familiar to the players there, or where they believe that the judiciary is most comfortable with. So there will be a wide array of options available, and I see great progress in making these legal frameworks reliable. In terms of the technology, yeah, there's competition, and interoperability may remain an issue. It really depends who will win the race, and I think we just have to await where it goes.
Very interesting, and a personal note. Thank you very much, Bilge Osisek, for your questions. We've got a lovely message here saying lots of love to Scott, please, from your former colleague coming from Barcelona. Now, we move on to a question, actually a pair of questions. I'm going to take them as one. They're from Akara Yibmantasiri. How the URDT, which is published by ICC, can be applied to DLT payment undertaking, and indeed, is that DLT payment undertaking done on a pre-agreed rulebook? Who would like to start with this? Philippe, perhaps?
I can certainly answer the second question for FQX. We are not building our solution on just a pre-agreed rulebook, which is a kind of an internal contract among the participants. We build it simply on the law chosen, which is either Delaware law, Singapore law, or certain aspects of Swiss law when it comes to debt securities, and thus we do not have to rely on a pure contractual approach among certified participants, but rather we rely on full recognition of state laws, and that I think is a big difference and provides a lot of comfort to all parties involved.
Cool, thank you. Sriram, perhaps you might like to have a stab at answering the first part of the question, how URDT published by ICC can be applied to DLT payment undertakings?
So if you look at the best practices that BAFT has put out for the DLPC, you'd see they've gone into some degree of depth of thinking of the transitions. So if you think of just a contractual relationship between two parties, the reality is, at least in a trade, that instrument goes through transitions. It's how you manage the state of transitions. So I think it is that rule book, or really the guidance given by the best practices. And what we have seen is you need a little bit more than that. We have applied, if you will, certain additional safeguards to ensure that at all points in times it is attestable and essentially being able to be supported in a court of law. So that's, I'd say, how the relationship between the URDT and the DLPC is sort of maintained.
Very interesting, thank you. And actually, I think that probably brings me on to an interesting question I'd like to ask you, Scott. It's coming from MD Ashikola. Does BAFT's DLPC have price verification solutions integrated?
That, to tell you the truth, I'm not able to fully comment on that in terms of the ability, but I believe that the flexibility is there. I put that over to my two panelists in terms of how they see the construct.
So briefly, yes, it does have, because both buyer and seller agree, and these agreements are encapsulated by their signatures, and those signatures essentially attest to an agreed upon price.
Very useful, thank you very much. I'm speeding through these questions because we've got several more to go, and I'd love to try and get an answer for everybody before we wrap up today because we've got so much audience engagement. Sarah Mikhail has asked a great question here. She is asking, do you see greater adoption of DLT for trade in certain markets more than others? How would DLT be relevant to SMEs in less developed markets with low internet or technological penetration? Scott, maybe you can start from that one, perhaps.
Okay, I'll briefly make reference to it. And the fact, again, the enabling resolution is a key starting point. And with that, I'd like to say that I'm aware through our close friend John Taylor that his group is undertaking a project with the EBRD to roll out leader legislation in emerging markets in the footprint that EBRD has. And this is going to be a concerted effort to try and bring more of the emerging markets into the fold in terms of the use. The interesting thing about the internet and the emerging markets is that in many instances, they're actually ahead of where what you would consider to be established countries. In Africa, you have telecommunications firms like Safaricom, which have systems, mobile banking that far transcend what we have available in the Western world. So, and even with what Mr. Elon Musk is doing in terms of his telecommunications networks, they're really bringing availability of internet to even the most remote of parts of the world.
I think that's a very good point altogether. And actually, John Taylor has given us a comment here. In addition to BAFT, the Asian Development Bank, the EBRD, and ICC UK are also pushing for the necessary legal changes to occur. And hopefully, money will be available to support this effort. Well, given Sri's number of 1.7 to 1.8 trillion as being a possible bagatelle just for selected SMEs, I would have thought that must be a priority. So good luck with that, John Taylor. Andrew Garner has asked us a question. What is the means for a bank that is not part of a large supply chain network to leverage financing via a DLPC and a low-cost connectivity to a network? Philip, would you like to start answering that question?
I hope I got it right, but it's a question whether it makes sense for banks to enter into such platforms and participate in such supply chain solutions.
It's what's the way for a bank that's not part of a large supply chain network to leverage financing via a DLPC? How can they get into that? So I suppose it's secondary banks and so on.
Yeah, well, I think it's, for example, on a platform like FQX, you have the opportunity to enter there and become a third-party buyer of eNotes and thereby actually acquiring credit risk against very good names. Say, for example, you have a large automotive company which pays via eNotes its suppliers then a bank can acquire these eNotes and have immediate credit risk against such a great car company in its books. So it's a very nice opportunity, and you don't need any other intermediaries to get into that relationship.
Excellent. Let me therefore, I'm going to try and make it to the last question of the day. We're going to run slightly over our allotted 45 minutes here. I hope you won't mind, ladies and gentlemen. But Frank Vent has asked a great question. Would BAFT provide a global register of payment commitments on which fintechs and banks could build solutions?
You know, I could answer it, Scott. I don't think a centralized register is going to be the answer, but what we will have is an attestation that through inter-blockchain communication, whether it's the Ethereum blockchain or the Cardano or the Solana or the Cosmos blockchain, we could assert that there is only one canonical version of a DLPC alive at a given point in time. So in a sense, we are using the layer one blockchains as our global registry. I don't think BAFT or any one institution can centralize it in today's world.
Would you like to add anything to that, Scott or Philip?
I fully agree with Sriram on this, so maybe Scott want to elaborate further.
Well, it would be a question, as we are a membership, an association, it would really be up to the banks within our membership to take on that particular task. But I'd revert to the product experts on the answer that Sriram gave.
On that note of heated agreement, I think it comes the ideal moment, as we've run through all of the questions, to round up today's fascinating discussion. I'd like to say a huge word of thanks to all of the people who asked questions. Frank Vent, Andrew Garner, John Taylor, Sarah Mikhail, MD Ashikola, Bilge Osizik, Akara, Yibmanta, Siri. It really was a joy to have you all interact with this fantastic panel today. I want to say a huge thanks to our speakers, Scott Stevenson of BAFT, Sriram Srinivasan of Skuchain, coming to us all the way from California, Dr. Philip von Rando, FQX. I think the one thing that's been absolutely clear today is we genuinely have the world in this particular call. And looking at the world, thank you to all of our sponsors right across the world, ladies and gentlemen, for enabling this, the latest of many of these great opportunities for people to talk about the future of digital commerce, digital finance, and how indeed we can add things like 1.7 to 1.8 trillion to the global economy. That's a serious number. So thank you to all of our sponsors. Thank you very much, I would also have to say, to Michael Mainelli for inviting me, first of all, and Peter Welch. He's done a great job in the back office here, keeping us all honest. My name is Patrick L. Young. Thank you very, very much for joining this particular show. And I do believe that the Financial Services Club will be returning in the near future with, a most exciting series of events you can see on screen at the moment. Launch of Global Green Finance Index 10, how to save the world with rigorous carbon accounting, your next lawsuit coming from a river or forest near you, and the EU AI Act, the state of play. You can catch us all on the Financial Services Club website. Once again, on behalf of all of our speakers today and the Financial Services Club, my name is Patrick L. Young, delighted to be able to step into the breach for this particular show, and I have certainly learned a great deal about the future of trade finance, and I'm very excited. Not only are we going to see fewer wet signatures, but hopefully a much, much better interrelated series of blockchain settled transactions, helping us grow the economic pie the world over. Thank you very much for watching.